Time for another stock review. This time we're talking Sunnova Energy, N-O-V-A. We're talking solar energy once again. I love this sector. You all know my favorite stock in this sector is Enphase Energy. So we're going to compare it to that as well. I think it's very important. In this review, once you've tapped the like button, I hope you have, and click subscribe, ring the bell, I'm going to share with you a back test comparing the S&P 500 to Enphase to Sunnova. The latest news, latest trends, what's going on the stock, and all of that. Plus, I'm going to share with you as well the inside trading, who's buying, who's selling, what the intrinsic value is, the balance sheets, what are we looking like, debt positions, and all the rest of it, all coming up in this video. Plus, we have Meet the CEO as well. You can invite the CEO onto the show if you would like to do so. All right, shall we do it? Shall we start? The chat's gone a bit crazy. I have no idea quite what's going on. This is being made during a live video. So, Sunnova Energy, N-O-V-A. Shall we have a look, first of all, what Sunnova Energy is, and look at the overall line graph. You can see it there. Look, it popped up. 2019, just before COVID. What a time to bring a new business out, eh? It popped up 2020. Everybody during COVID thought solar is the future. Let's all buy it. We got all these stimulus checks, all this money. We saw other stocks rise like Kavana. We saw Zoom take off, and all these things which were COVID plays, they all popped up, boom, and then they all fell away again. So straight away, what you've got there is a COVID play. There's March 2020, up it goes. Straight after COVID, people were getting on Robinhood, people were getting their free money, sitting at home, bored, thinking, Tesla, Zoom, and solar, let's buy anything with those names in it. So off it went, and down it's come since then. It's never really recovered, has it? Let's have a look at it. Sunnova Energy International is an energy service company which engages in provision of responsive energy management solutions. The firm also offers energy products and services. Show me more. The company was founded by William Jackson Berger in 2012, headquartered in Houston, Texas, just down the road from me. All right, William Jackson Berger. If you'd like William Berger on the show, I never invite anyone. I don't believe in selling my services. However, if you are an investor of this company and you email investor relations, tell them about our Meet the CEO series, they can come on the show. They can be part of it. We've had many before and many to come up afterwards. I would love to interview a CEO and have them on the show. So if you'd like to do that, email them and build a relationship. Tell them you're an investor, and hopefully they'll be on the show. 2,047 employees, Houston, Texas. If you're buying it on margin, it's regarded as sort of medium risk. 25% is the lowest, 100 is the highest. It's 50%. On margin, so it's regarded as relatively high risk. Market cap 880 million, so it's a reasonable sized company. Negative $2.05 price earnings ratio. Okay, no dividend here. Volume 6.74, volume today 2.67. Low volume, which means you might have to sell for less to get the stock. To sell your stock, not a lot of volume on the stock. 52-week high, 24.56. 52-week low, 3.37. As you can see, very volatile. Let's scrolling on down. Now, this is a useful tool we've now got on Robinhood. I do like this feature. We're going to scroll down here, and we're going to see the trading trends. Hedge funders, are they buying or are they selling? They were buying, then selling, bit of average then going on, buying and selling. As you can see, so it's quite a volatile trading stock. Let's see who's been buying and selling it. We can see here that More Capital Management have sold, Ardsley Advisory Partners have sold, SCP have sold, reasonable amount of shares as well, 1,430,000 shares there. A difference of 88% down. So they've sold pretty much all their shares. 189,000 shares, market value 1,160,000. Okay, that was Q1 24. Anyone been buying? Well, Caxton Associates have opened a position now. They've just bought in, and they bought 10,000 shares. All right. What about insiders? Tell us a little bit about the movement of the stock. Insiders in February were buying. Let's have a look what sort of trading it was, though. Accumulation of shares via grant or reward. So it's basically paid in compensation. It's not insiders buying the stock. It's getting paid via compensation for working there. It's very different than buying with your own stock. It's a completely different thing. No major buy-ins. This is just buy-ins via grants or reward. It's not buying stocks. And as you can see, it's a very, very small amount anyway. Very, very small amount. No real large positions there being taken by insiders recently. Since August, it's just a few shares, but nothing dramatic really to get excited about. So we're not going to get excited about inside trading or institutions. Nothing there. What about the earnings? Well, as you can see, it's losing money. It's been going sideways. We were going up in Q2 and Q3, but Q4 disappointed, fell away. That's expected, though. That happened with Enphase. We knew all about that. That was we covered all the earnings for that, so we're not concerned about that. Then things improved of Q1, and I would expect things to improve now in Q2, which is available July the 31st after hours. If you're a member of my channel and you do a minimum of $5, you can ask me to cover the earnings, and I will cover the earnings. This one is in the evening, so I'll work late in the evening after hours, and I will cover the earnings if you are a member and you super chat more than $5, and we will cover the earnings for the stock. All right, so if you want to do that, you can. Now then, are we likely to see an earnings beat? I would say on the next earnings, definitely. This earnings, well, it's hard to say, but I think the good times are coming because solar, like Enphase, is all about interest rates coming down. Interest rates could come down in July. They're going to come down in September, but now people are saying even as early as July. It's getting better and better all the time. So we could get rate cuts anytime. I've been saying it's imminent now for a couple of weeks. So I know that our Q3 is going to be good because could Q2 be good? Well, people believe that rates are coming down now, so could start to buy their solar and order it. Depends if you've got a fixed rate, I guess, on interest or whatever. But rates will come down on the next quarter. I don't know if they're going to be, but I would say things are looking more promising going forward. Who else buys the stock? This is important. This gives us a direction of the style of traders and who's buying it. Sunrun, Plug Power. Plug Power is a great company, but heavily manipulated by scammers, Russian oligarchs, God knows what else. They've tried to get me to, do all kinds of stuff. So I'm not interested. Plug Power is good. Enphase Energy, there it is. Fuel Cell, that's high risk. Blink Charging, that's high risk. Sun Power, never reviewed it. Charge Point, I've reviewed it. I can't remember what the outcome was, though. Solar Edge, another good company. Neo, I wouldn't touch Neo. I'm not interested in that. Next Era Energy, great company. So it has some good companies, but some volatile companies as well. All right, let's look now back before we go. Let's make sure that everyone's tapped the like button so far. Let's look at some news literally just out yesterday. Susquehanna adjusts price targets on Sunnova Energy International to $12 from $10. Maintains positive rating. This is good. I do think the stock is going to rise over the next couple of quarters. Will it rise this quarter? I don't know. There could be some great news. This could be a good time to buy it. I think all solar now is about to take off. I'm very confident of that. I really do believe that's the way forward. I've got solar. My house runs for free. I'm fully aware of the benefits of it. I do prefer Enphase, and we're going to just show you the comparison in a minute. But we've got a rating here increase from 10 to 12. That's very, very good news to read. Jim Cramer. This always makes me laugh here. Jim Cramer says these stocks could soar or sink if Trump wins. Right. What a ridiculous statement that is. They could go up or down. Well, that's useful then, isn't it? Jim Cramer is all about getting you to watch TV. It's always drama, boya, banging sound effects, appealing to the lowest common denominator. Let's make some noise. Let's make it wild and crazy. And we can talk rubbish. It doesn't matter. People will watch. Anyway, Jim Cramer has identified a list of stocks that could experience significant gain or losses if Donald Trump secures the 2024 presidential election. Let's be absolutely clear. I'm not going to read all of that. We're going in and out of stocks and rest of it. I'm not going to bother with that. What I am going to say is I would say most people now, even if you are supporting Joe Biden, most people would think after what's just recently happened, Donald Trump is likely to get in as the president. Most people, I think, would agree he's miles ahead in the polls, whatever. So Joe Biden needs some things to attract voters. There's been lots of moves recently in certain things. For example, and I was thinking, this is why I got confused with the stock earlier. The Tilray sector, I'm not going to use the name, I'll try to keep away from that for want of having this video demonetized. It's always what happens. But there's going to be lots of incentives, I think, from the current government to try to win your vote. And I think it's quite fair to say that Biden is behind solar, and I think Donald Trump is more with lighting up the coal mines again. It's just a general term. So I think there'll be an incentive over the next couple of months leading up to November to drive solar, because I think, the chances are Biden will lose the election and Trump will get in, and I don't think this is his main focus. So over the next couple of months, I think we're going to get some incentives on this stock, and people and the government try to make it profitable, make it long lasting. So when Donald Trump takes over, then it could be financially rewarding, and we know that would suit Donald Trump. But I think between now and then, Joe Biden's got to get everyone buying it, giving incentives. I think there could be some of that going on over the next couple of months. So I do think that's worth thinking about. Anyway, let's compare it to the S&P. If you put $10,000 back in 2020, you can see how the green one is Enphase. Enphase really did pile away. It's got the best balance sheet of nearly all stocks. It's a great run business. It's a good balance sheet. I like the business. And as you can see, it stormed ahead of the S&P. It stormed ahead of Sunnova. Sunnova, by the way, is in purple. The S&P is in blue. And because we've had such amount of growth here, it makes the S&P look flat over that period of time. It isn't actually flat. It's because Enphase had such a rise and drop again. But you can see Enphase is in green, the S&P is in blue, and Sunnova is in pink. All right, so it's underperforming the S&P and certainly underperforming Enphase, which I think is the better one to buy. Anyway, let's look at the numbers right now for Sunnova, and you can decide for yourself. Here we go. So Sunnova, undervaluation, 85%. However, we don't use DCF valuation on this stock. It's not provided, so we cannot say if it is accurate, because we're saying that the stock is worth $46 here, saying it's undervalued by 85%. I don't think you can rely on that, so we're going to knock that out. We're not going to use that. What about this is what we can use. Revenue. Revenue is down 0.1%, hardly at all. But we are expecting now, going forward, June at 811, we're expecting a bit of an S-curve. This is likely to happen. If this happens, of course, the stock is going up. So that's all good. I think the election does have a lot to play in this, though. But anyway, that's good. Operating income down 22%. It's at the bottom. Expecting it to really take off now. That's good. Net income, it's up 3%. And now we're expecting to take off and then go a bit flat through 25 on net income, however. Investing cash flow, let's have a look at that. Financing cash flow, down 2%. Investing cash flow, down 3%. That's a positive, of course. And operating cash flow is up 44%. That's good. As I'm talking about it, the stock is rising. We could rank for this stock. Not a lot of interest in it at the moment. And a bullish review would be good. So we're seeing the stock continue to rise. These numbers are looking good as we talk about it. Let's carry on. What about the balance sheet? 11 billion in assets, 231 million in cash. However, 10 billion in liabilities. How much of that is long-term debt? 70+%. Look at that. Now then, that's a hell of a lot of debt. That's not good. That's why I prefer Enphase. They're a much better business. If you're going to buy a business, not a stock price, you're going to buy Enphase. Now, you might go, it's more expensive, but don't forget you can fractional share. So if you've got $100 to spend, you can buy $100 of Sunnova or $100 of Enphase. I still think there's more growth in Enphase, but that's just me. 70%, 71.23% is long-term debt. That's a hell of a lot of debt. However, with interest rates coming down, growth in store, this could be great. Interest rates will come down 0.25%, I think, in September. It might even come as early as July, and then a couple of months later, another 0.25%. That'll make a big difference. My margin is going to get really cheap very quickly. So I'm really excited about how it's going to benefit my margin, and it'll benefit companies that borrow a lot of money as well. But bearing in mind, the money is spent. It's not like they're using the money to build the business. The money is already spent. It's just now going to reduce their interest payment. So it can help the business. Now, 40% margin looks good. 40%. Now, remember that. Gross margin, net margin. Net margin is negative, 57%. Gross margin, 40%. Let's look at Enphase, the competition. Let me type in ENPH. Let's remember this. 40.57. All right. It's important to compare. ENPH 40.57. Right. Scroll down. There you go. 46% margin and 15% positive. That is the strength of Enphase. A much, much, much better company. Much, much better company. Okay. Going back. It's worth just comparing them, right? 40, negative 57. I think Enphase is the better buy. Anyway, scroll down. Profitability, 36%. It's going to improve because their rates, interest rates will come down, so their profit will decrease. Sorry, their profit will increase because their expenses on interest, and that's the biggest part of their what did we say it was? 70% of their expenses is debt. So their profitability score is about to dramatically increase. Their solvency is going to increase because their debt position is going to come down because the interest is going to come down. But look, 25%, it's not good. So what you're buying here is the growth with a stock that's really beat up because it's got a lot of debt. I would prefer to buy a company that has much more dominance in the sector, a better balance sheet, doesn't have this sort of debt, much higher margins, can crush Sunnova and take over. I would buy Enphase, but you might feel that this is a better buy because the price is down. Well, make that decision. However, Wall Street think there's a 44% worst case scenario downside. On the average, 54% upside. On the highest, 206% upside. Nice. That's good. scroll down. There's all the competition. If you want to check the competition out yourself, I will give you the link for this, and you can use the software that I'm using. We just talked about the inside trading. Nothing massive coming in, nothing massive going out, about the same. Just a bit of tax positions moving around, nothing really to get excited about. Short interest because of the debt is 38. 20 is excessive. 38 is extremely high. So we've got really high short interest at the moment. When we get some good news, positive news, interest rates coming down, people could start buying. It could crush the shorts. That's what you're buying here. You're buying a stock that has a really bad short interest, excessive, dramatically excessive short interest. With some good news, this could explode the stock. That's what you're betting on. Sunnova, let's hear. Only a week ago, I think we can use this.
Berger, John, welcome back. Good to have you.
Thanks, Carl. It's great to be here.
There is this sort of budding playbook that solar is going to begin to play in this era of huge power demand, and that maybe Fed cuts can be a part of that. You go along with that, I assume?
Yep.
Absolutely. When you look at the power demands, you've got electric vehicles, you have data centers and the AI demand, you also have onshoring of manufacturing and general economic growth. We were in a power bear market for, call it, 21 years, and we just got out of it, from our view, about 18 months or so ago. And we see that this power bull market's going to last for quite a number of years, because it takes a lot, even with what we do, which is solar service behind the meter with storage. It takes a lot to bring all this infrastructure online. And in fact, I'll tell you right now, we're in the middle of Beryl. I'm in Houston, Texas, and I'm operating on Sunnova service because our utility, CenterPoint, has over 2 million customers, including myself, without power. So solar is a part of a reliable, cheap power that this country needs more than ever.
Right. Would you argue that the residential market is sturdier at this point than the commercial market?
Yes, I've been in the power business for about 30 years now, and I've done quite a bit, both on the front of the meter, the utility side, and then the behind the meter, the customer side, for both businesses and homes. And I'll tell you that what we need is everything. We need to have a more reliable system that operates more like the internet, where you have power behind on the loads, in this case, the homes, which I'm using right now, in conjunction with what we see with the utilities. And when you see a lot of the permitting issues that we still have not had any solution to on the utility side, there's a lot easier way. It's still not easy, but there's a lot easier way to get power, and reliable power, and cheaper power on the customer side. So especially if rates start to go down a little bit, given what we're seeing in the recent data, we do expect to see quite a bit of demand pickup. In fact, we're seeing a pretty large demand pickup that is, personally, I didn't expect it over the last, call it 6 to 8 weeks.
But John, what happens to the tax credits? How confident are you that you can maintain them under the Inflation Reduction Act going into the election?
Yes, that is a good question in terms of the Inflation Reduction Act. One thing is, we are just now starting to see, as an industry, the cash flows from the Inflation Reduction Act. And so that's going to go into our cash flow, which very much as a company, we're focused on generating the cash. When you look at the bipartisan nature of the IRA, despite a lot of the sound points or sound bites, if you will, it is a long tenure of having both Republican and Democratic support. The Inflation Reduction Act was actually designed to accommodate the existing oil and gas industry. Obviously, many of those companies are headquartered here in Houston. And so we see a lot of bipartisan support when you get away from, I would say, the politicians when they're running for office. And we're seeing a lot of investment, billions and billions of dollars, not just solar companies, but oil and gas companies, in these types of solutions that the Inflation Reduction Act is supporting. So when push comes to shove, I think that the Inflation Reduction Act, in terms of the majority, especially the tax credits, are going to stay on hold regardless of who wins the White House.
Joining us this morning is Sunnova's founder and...
There you go. Interesting points. Let me scroll down to the sentiment over the last 90 days. 46%, moved up to 60%, 30 days. 75% 7 days, and no news today. Okay, let me give my final thoughts on this stock. I think that solar is in the next quarter, not necessarily this quarter, but the next quarter, I think is going to explode. I think we got good things. I think that CEO there was dead right. More people need power than ever before. With like you mentioned, EVs, EV tolls, data centers. We're going to need more power. We want to become more independent in the United States as well for its power. I think solar is the way to go. Do I think this is the best company? Well, its stock is down. Its earnings ratio is a lot lower than some of the competition. I think the best buy is Enphase Energy, though, overall. But it does have a huge amount of short interest. With volume on a good earnings, this could go nuts. It could go up a lot here. 38% short interest. The stock is going up. I mean, it's up today nearly 4%. It's up 16% on the week. It's definitely 36% going up. I mean, it must be getting pretty tight. 79% over the last 3 months with such a short interest. That is pretty good in my book by any stretch. I do think there's going to be some incentives here. I think Biden's going to need to do something if he's going to keep Trump out of the White House. He's going to have to come up with all kinds of gimmicks and ideas to incentivize. And then, of course, once this takes off, Trump will see it as a really good business, more so than a green play. I think he'll want to keep it because it makes money. I think that will just be a no-brainer. Interest rates are going to come down. That's a big part of this business. So for me, it's a buy for this sector. I think Enphase is the better buy. For this sector, definitely buy this sector. I think we're going to see massive gains over the next couple of quarters. This could be a good one with the amount of short interest, the debt position, some good news, some announcements from government, interest rates coming down, a beat on earnings could create that. So this is a potential buy from me. Certainly one for further investigation. Definitely the sector is a buy. Is this stock a buy? I prefer Enphase. I don't see any point in buying several. However, it's interesting. It's good. I see a positive here with the amount of short interest, the potential, the earnings, and all those things all coming together. You could have a really big play here and it could explode. Anyway, that's my thoughts. Click above my head for all the links. Down below in the description, you'll find Alpha Spread, which is what I use. All the links are down there. Over here, I'll put my full Alpha Spread playlist and the Sunnova playlist. I think I have a playlist for Sunnova. I'll put that down here and you can see my earnings if I cover them. If anybody wants to request an earnings, I'll cover it, and all the past reviews as well. Till next time, as always, take care of yourselves and each other.